My next guest is the president and CEO of Avanti Mining, which has one of the most interesting molybdenum plays in North America. Avanti has produced a positive pre-feasibility study on the project that outlines a 15-year mine life in an open pit style deposit that could inject hundreds of millions of dollars into the provincial and local coffers. The company is in close consultation with the Nisga'a First Nation band in Kitsault, and the president and CEO of the company is Craig Nelson, and Craig joins us today. Craig, thanks a lot for coming in.
Nice to meet you, Doug.
Your pre-feasibility study came out in 2009 and told you a lot, actually. I've looked it over. It's 490 plus pages. But one of the things about it that's interesting are the number of signatures on it. You've got Knight Piésold, Wardrop, RDI, SRK, and the list goes on. Why do you need so many industry giants involved in a paper like this?
Well, Doug, it's sort of horses for courses in this business. We use the best consultants in their particular area. Knight Piésold is the best at tailings management facility design. Wardrop is a terrific engineering group for overall project cost. Rescan is a great environmental consultant. And we use the people that are best in the field.
Right. So what did the report end up telling you?
That we have one of the top 5 undeveloped primary moly assets in the world. It's a unique position for a junior resource company to be in, to have an asset of this quality.
How profitable does it tell you this project can be?
Well, at the price assumptions we've used, Doug, this mine on a pre-tax basis has a 50% profit margin. After tax, after royalties, after all costs, it still has a very enviable 30% profit margin.
So what's the net present value?
It has a discounted net cash flow value of $550 million today. On an after-tax basis, it's worth about $1.6 billion. And if we have 1 year that moly returns to the values that it was between 2004 and 2008, which is close to $30 a pound, this project will pay back all its capital costs in less than a year.
So this is really a huge project with a 15-year mine life, 40,000 tons per day at 0.01 molybdenum. What percentage is that of the world's production of molybdenum?
5% of the world's supply. It's a very attractive project.
Let's talk a bit about your market valuation. Your papers say that you're very close to production. You think you can be in production by 2013. But is the market giving you the value that you think you deserve then? If we pull up your stock chart here, you're trading in the 17 to 20 cents per share range right now. What is it that investors are discounting this for right now, or are they just not getting the picture?
Well, I think almost every moly stock goes through this evolution in its valuation. And the closer and closer you get to feasibility and permitting and financing, the higher and higher your share price is going to be to reflect the valuation of this asset. And at this point, I'm estimating that we have about a 20% valuation of our asset. When the feasibility study is done and financing is placed, we should have about a 60% valuation. So that means in today's terms, we could be going to a market cap of something of $275 to $300 million. And fortunately, we have 2 other fairly significant prospects on the project. We haven't gotten them to the point where they have qualified resources yet by the Canadian standards. But they do have very significant historical resources.
So looking forward to a time when you may be mining at Kitsault, how many people would the mine employ, and how many people could you employ during the construction phase of the project?
Well, in the construction phase, we're looking at between 200 and 400 jobs, depending on the season and the time of the year. The mine itself calls for 330 full-time employees for 15 years. And if you look at the statistics of spin-off jobs or other jobs that are created by having 330 full-time mine employees, you could estimate between 5 and 6 other jobs. So we could be looking at between 1,500 and 1,800 other jobs in the valley, in the region, just to support this mining operation.
You know, in some ways the project sort of looks like an inevitability. It'll create hundreds of jobs, it'll provide very low-cost molybdenum. But what I've been wanting to ask you is about the management team, how you put together the management team that you have. It's got some major mining legends on it. For one, Pierre Lassonde. So how do you go about gathering a group of people like this?
Well, it's actually people that I've worked with in the past. Pierre Lassonde helped me start Metallica Resources. Bob Cross was an early financer of Metallica when he was with Gordon Capital. And people that you know and have worked together with for a while tend to stay with you. A.J. Alley, I've known for a long time. He was the audit committee chair at Metallica, and he's really one of the better mine financiers around.
He's your CFO.
He's my partner and my CFO. We each own a very large portion of the company. We each own over 10 million shares of stock that we've purchased. And we're firmly committed to the success of this company.
History would suggest that bringing giants into production is a very difficult task. What are the issues? Permits and financing primarily, I'd say. So let's talk about both. How are you dealing with the permitting process?
We've just opted into the BC environmental assessment process. We did that for 2 principal reasons. One is we think it helps us comply with the requirements under the Nisga'a Final Agreement, the treaty that the Nisga'a have, and it's a process that they understand. And secondly, it has a legislated time frame, and that's very important for us to have a very clear time frame. And I think the province has done a fantastic job of sticking to that time frame over the last couple of years. They've made a very serious commitment to clarity in the permitting process.
That helps. And what is the time frame for getting through the environmental assessment?
Well, from the time you submit the application, the environmental assessment application, it's about a 270-day period. So about 9 months.
Less than a year. That's not bad.
Yeah, and we hope to be able to submit that application at the end of this year.
And what about financing? The capital costs that you've looked at in the pre-feasibility study is $641 million. How will you go about getting that?
Well, we think about 60% of it can be raised in debt. And we have West LB working for us as the principal arrangers. They're one of the largest European resource banks. And they've told us that if we can find offtake purchasers at a fixed base price, so a floor and a collar for the commodity, for only 40% of our production for the first 5 years, that will guarantee the revenue to pay back that debt. So that's our target right now, is to find steel producers that will purchase 5-year contracts for up to 40% of our production. Now, the remaining 60% we sell at market price, and it's in the hands of the shareholders. It doesn't have to be used for debt service.
Right. Craig, in Avanti's case, you're going to be working quite closely with the Nisga'a First Nation. How involved are they in the mine development process and also in the sharing of potential revenue at a mine at Kitsault?
Well, first off, we have to comply with the environmental assessment provisions of their treaty. So they're involved with the BC Environmental Assessment Act process. Secondly, the government has already indicated a willingness to share revenue with the local communities from the BC mine tax that we will pay. And, you know, that's about 1/3 of the tax we pay on this project. Total tax we estimate at being over $800 million.
Craig, can you explain the scope of the project for investors?
Well, it really is a very significant asset. As I said, it's one of the top 5 undeveloped primary moly assets in the world right now. And in full production, it'll generate about 5% of the world's supply of the commodity. It'll be the largest molybdenum mine in Canada. It'll provide a lot of jobs and salary revenues for local residents. It will pay a huge amount of tax to the provincial and federal governments, and a portion of that will come back to the local communities. It's a very significant asset.
Right. Time frame. What needs to happen between now and 2013 to get to production?
3 things. Complete the feasibility study. Based upon that, get the mine finance arranged with offtake agreements. And lastly, get the environmental permits to start construction.
And certainly when that happens, we're going to see a big change in the share price.
Yes, we believe so.
Craig Nelson, thanks a lot for coming on the show today. We really do appreciate you coming on, and we hope to see you again.
Thank you, Doug. Appreciate it.
Best of luck.